So on the one side, I guess every European country will make its own kind of stablecoin coming from banks. So we talk about commercial money, which is tokenized.
Imagine go to Apple and say, hey, can you issue part of your share capital in actual native tokens?
You know, if adoption is not coming organically, we can force it to happen by acquiring businesses that may already have distribution, may already have some type of business model that benefits from crypto.
Ladies and gentlemen, as promised, I asked you if you're ready for who's next, and here they are. Let's give them a round of applause.
Good morning, everybody. I'm really glad to be up here with a great group of panelists. Well, there's a bunch of investors in this, the panel. There's Marc from Polygon as well, so it should be a really insightful panel about tokenization, stablecoins, and sort of the next generation of, of opportunities in that space. I'm going to leave it to the panelists to sort of introduce themselves and share a little bit more themselves and what they do. So Marc, do you mind giving a quick intro and keep it 20 seconds or less?
Yeah, I can do 20 seconds or less. There's not much more to say than that. I'm Marc Boiron. I'm the CEO at Polygon Labs. For those of you who don't know Polygon, we have a blockchain that we've built for a long time. We've got 51 stablecoins on there, more than 18 funds, over $3 billion of stablecoins, over $1 billion of tokenized assets, and continues to grow very, very quickly. So that's Polygon in a nutshell.
Hi, everyone. It's a pleasure to be here. My name is Alex. I'm an investor with Easy Labs, mostly focused on DeFi, but we're quite agnostic when it comes to the sector as well as the ecosystem. We do focus on early stage investments, so pre-seed, seed is our usual sweet spot. But we've done later stage investments as well.
Hey everybody, I'm Juan. I invest out of our venture strategy at VanEck. VanEck is an asset manager with roughly about 140 billion under management. We are meaningfully excited about crypto, and we have both liquid funds and a venture fund. So excited to be here.
Hello everyone, my name is Alice, and I'm the partner at Foresight. Foresight is a crypto fund bridging East and West. We have offices in both Singapore and New York. And nowadays, our investment focus would be around stablecoins and AI. So for stablecoin, we've already invested in Ethena, Agora, Codex, Noble, and definitely looking to invest in more. That's why we will be announcing our new fund for stablecoin infrastructure during Token 2049. And also for AI, we've invested in Zero-G, in Outnet. So definitely very happy to chat with everyone today here.
Perfect. Yeah, I'm Paul, CEO of GemX. We are institutionalizing the investment into colored gems. We start with emeralds. Maybe in the future there are more coming.
Okay, and sorry, I didn't introduce myself. I'm Will. I lead venture investing at Galaxy Digital. Just to quickly start, I think we'd be remiss talking about tokenization without talking about stablecoins. I want to pass a quick stablecoin question to the group. Whether it's possible at this point to compete with Tether and Circle. Are there any actual opportunities or projects that you guys think have a legitimate shot to change the market structure? Or should we bet on stablecoin scaling from 250 billion to $1 trillion in the next 5 years, and the majority of that being Tether and Circle? Juan, I know you've given some thought to this question, so I'll start with you, and then if any others on the panel want to jump in after Juan.
Yeah, thank you, Will. So it's a tough question, to be honest, but we think we're still super early. Two particular categories where I think there's still a chance for disruption and for startups to kind of emerge and solidify themselves is in stablecoin clearing and in distribution. So these are two categories where, as both USDC and Tether scale, there's still going to be an enormous opportunity to remove the counterparty risk for distributors that want to integrate stablecoins, as well as the independent distribution endpoints that are going to be all over the world, acquiring customers and basically packaging some of these services in ways that they may or may not know what stablecoin they're using under the hood. So this is the opportunity that companies like Dollar App or Lemon Cash in Argentina are pursuing, or even the likes of Robinhood out of the US. So both distribution and clearing as a means to remove counterparty risk, I think is something that we're both betting on.
Marc,
Yeah.
I'm curious, you're not an investor, but you're making bets on different opportunities at Polygon. How do you guys think about stable coins on the go forward and bringing the right stable coin market structure on Polygon?
Yeah, I mean, we're very agnostic when it comes to stablecoins. Like, we just want people to use whatever they frankly find best for them. But I think the question and the framing around this idea of, like, can you displace Circle Tether? I don't think you need to displace Circle Tether. You talked about this, right? Like, every fintech is going to have its own stablecoin. I mean, you could go beyond every fintech and arguably say every enterprise. We saw, like, Cloudflare's announcement last week. So what you're going to see is just a massive increase in market cap, more and more stablecoins. There's definitely going to be some kind of play around stablecoin consolidation or some, like, aggregator in some way. There's different ways in which we're thinking that could happen. But ultimately, you just see it all grow when Tether's market share just shrinks, not because Tether's market cap shrinks, but because the share of stablecoins is just becoming so much greater. And ultimately, Tether's, I think, market power goes down as you see more and more revenue sharing happen on those stablecoins. And Tether's going to be the last one to give into that. But I think there's just a matter of time till some fintech with massive distribution decides to start doing that, and others need to give in.
Do you guys, I mean, Alex, maybe I'll pass it to you. Do you think you can actually have a case where you have 1,000 stablecoins and every business has, you know, their own stablecoin? Because then you reach the point of kind of liquidity fragmentation. Like, do you see that as a risk?
Yeah, totally. I think this is exactly what we're seeing right now. Like, everyone is announcing a new stablecoin almost every week. I think this is not necessarily bad. It's actually a good thing that there's sort of iterative approach to doing things, and that's what crypto is really good at. I think, like, if you were to roll back, the first phase of stablecoin adoption was, you know, USDT, USDC, and a bunch of other, like, fiat-backed stablecoins. They're really trying to use it as a means of, like, locking in your P&L when you didn't have the fiat alternative. The next phase was, like, earn-based products, the likes of, you know, USDE and a bunch of others, where they actually get the yield that's passed from the issuer onto the holder. And then the third iteration, or third phase, I think, of adoption is exactly this, is where you have a lot of use cases at the distribution channel, primarily payments, I think. And we're in that third phase of adoption right now. And yes, we'll have a ton of these different stablecoins. Longer term, I do think there's going to be some sort of a consolidation.
It is worth saying, though, that, like, lots of stablecoins doesn't necessarily mean fragmentation, right? When you think of, like, Agora white labeling its solution, right? Like, all you're talking about there is, in the back end, easy swapping between those with no slippage in any way whatsoever, and that fragmentation isn't real fragmentation, actually.
Yeah, I think that's a good clarification. Alice or Paul, any thoughts on this topic? Otherwise, we'll jump in.
Yeah, I think, like, every speaker has touched upon like 2 keywords. One is distribution, and the other one is use case, right? I wanted to emphasize on the other side where, if, let's say, who are your target customer for the stablecoin? If it's on-chain users, I would say that's mainly for the Tether and Circle's opportunity, because the market is very saturated, and also for exchanges, right? They are the ones that can dominate this market. But if you shift your focus on the off-chain community, as in, like, somewhere in Africa, in Latin America, where John mentioned Dollar App and Lemon Cash are doing very well, they're targeting a different groups where, like, they kind of get abandoned by the traditional banking, right, in rural area. That's where, you know, you could find new opportunity as a startup. So that's where I see, like, most of the stablecoin issuers right now don't have the opportunity to tap into this kind of community, but those who does, it actually could be like unlock a huge market opportunity there. Yeah.
Maybe I can add the European perspective of it, because there is something quite interesting happening at the moment. So on the one side, I guess every European country will make its own kind of stablecoin coming from banks. So we talk about commercial money, which is tokenized. Then the European Central Bank is now pushing forward to make a central bank money as well. Why? Because the market is dominated by the US dollar, and the European Central Bank wants to change this. So all of them goes to the same market, wants to find usability, where to use it. And the question, I think the biggest opportunities based on this is, for startups, what are the value-added services? So when you then talk with the different central banks, they only ask not, can you use a stablecoin? What can you provide on top? They want to see apps where you go somewhere with your app and automatically pay for parking or do this and that. So, and this will be a big fight, I guess, the next couple of months and years in Europe, but we will see how this goes.
The reason I bring up stablecoins, obviously, in a tokenization panel is because we conceive of sort of stablecoins as tokenized cash, and that's the first example of tokenization of an asset class. I'll go kind of a little bit down the road towards tokenization, ask the folks on the panel, what comes next? Like, what's the next big category to be tokenized? Obviously, there's tokenized money market funds that sort of have reached some semblance of scale. Some people talk about tokenized stocks. On the converse, I also hear some other people say, well, actually, we should be tokenizing the hardest to reach asset classes, right? So collectibles and sort of private funds, because those have the least amount of liquidity on them available. So what would you guys say? And maybe Alice, I'll start with you. What would you say? What's the next big opportunity in tokenization and the next big asset class to get tokenized?
Oh, that's me, right?
Yeah.
Okay. So I think for tokenization, we've seen a lot of the tokenized stocks coming out. I think that would be a very interesting opportunity to look at because that unlocks a lot of the investment opportunities for investors around the world who doesn't have the access to invest in US stocks, especially like say investors from mainland China. It's a huge market, right? And they need the US equity access, but they actually cannot invest unless you have a bank account in Hong Kong or in Singapore, somewhere else, and become an accredited investor. So I think that unlocks a lot of market opportunity there.
Do you think the value proposition is clear enough? Maybe Juan or Alex, if you have a view on this, is the value proposition for tokenized stocks versus what people already have in their brokerage accounts, strong enough to justify a large tokenized stock market?
Yeah, I think so. I mean, the way we generally think about it is we're transitioning from this kind of account-based form factor of accessing financial services, and we're transitioning to a wallet-based form factor where you as a retail participant or business can access virtually any asset that's been issued by anyone. Technically, there's still a lot of compliance hurdles to actually make that happen, but the reality is we should expect, let's just say somewhere in 5 to 10 years, that any wallet-based front end should be able to access assets issued by any issuer. And the kind of 2 points to your question, Will, is where's there latent demand for some of these existing securities or financial assets that perhaps certain communities around the world can access, and I think that's where we land at, U.S. equities. If you have someone, again, I'll reference Lemon or Dollar App in Latin America, since I'm sort of familiar with them. If you have a wallet that already services them with dollars, it's easiest for them to use the same infrastructure to deliver, some of these other products. And then conversely, on the other side, if there's latent supply that can actually align the right incentives, to your point, there's definitely an opportunity for net new assets that perhaps we haven't even thought about, net new commodities that could be tokenized, could be productized with blockchains as kind of this global exchange.
Yeah, from my perspective, you need to go to first principles on this, right? And when you think about that, so there's kind of two sides of this, right? There's these assets like tokenized collectibles. I mean, that market's tiny, relatively speaking, and so you might see it take off, and it makes a lot of sense. And you see things like Courtyard, for example, tokenizing Pokemon and other cards. I think that kind of stuff makes a lot of sense. But the market's just so small that the impact globally is just tiny. When you get to what actually has a real impact, like equities and things of that nature, I'm kind of on the other side of this a little bit. I think first of all, the idea that any blockchain is going to be the infrastructure used for trading tokenized equities ridiculous, because centralized exchanges trade these things in microseconds, and no blockchain's ever trading these things in microseconds, ever. So it's not even relevant. That doesn't mean they're not tokenized and then traded on centralized exchanges and then settled on chain, but that doesn't mean they're actually moving in size at all. When I think about what actually makes sense is, you have the parts of the market that have difficulty accessing these right now, but there's stuff that still makes it hard, like capital controls and things like that, some people will figure out how to get exposure, but it's not big. I actually kind of going back to that point about first principles, I try to think about what is it that people would actually use on a daily basis on chain in a way that makes sense today. And to me, it's blue chip stocks, which is the thing that you naturally don't think about that actually makes the most sense. Why is it? Because the thing that makes sense to do it, that latency doesn't matter really, is collateral. And that's what funds are currently trying to do. do it. Problem is, like, money market funds just don't earn the yield that you need. So we're seeing private credit funds. Those make more sense. But actually, if you had like blue chip equities that were tokenized that you can now use as collateral, I would easily take that out of my brokerage account and actually go use that as collateral, borrow against it, whether I loop that or do some other stuff. Like, that gives me a lot of flexibility in an asset that would be able to be used as collateral. It doesn't have like these redemption limitations that funds have. And that starts becoming like a really interesting asset that is huge in size that could be used.
So some of the composability aspects of, of DeFi maybe being partnered with tokenized stocks and actually getting a ton of interesting kind of value out of the back end of that. That's the value proposition to you?
Yeah, I mean, ultimately, you need to look at like what a blockchain's good for, right? And like, yeah, the DeFi aspect's definitely one of it. But I think when we start getting to just these points about like, you're just doing it for transparency, like maybe like, again, that's why these assets are going to be tokenized. But like, what actually happens with them, what adds value to people? I don't think it's lowering cost from tokenization and having transparency. I think you need to be able to do something more with it that you don't do today.
Paul?
Yeah, maybe what I want to add is that, I mean, we talk also with a lot of blockchain. At the moment, the focus is on money market instruments. Everybody wants to go into these industries. What I think is in the background at the moment is everything around all different types of assets which give value. You don't see it. But I think in the next 1 to 3 years, for every asset class, there will be 1, 2 players in the market who will dominate the market, like US Data and Circle. This will be for all asset classes. They will not grow that fast, but as soon as they have some sizes, then they will grow fast on that. And the real scaling will be, this is my personal view, is when middle-sized companies start tokenization in order to building new ecosystems for their own customers, for their partners, and find new ways also to get money into their companies.
Alex, I'm going to ask you to give us the devil's advocate. If it's not tokenized stocks as the next big market for tokenized assets, what would it be? Steelman, the best case alternative.
Look, I think tokenization follows the path of least resistance. So you start with cash, very easy to tokenize, moving on to like cash equivalents. You know, these are T-bills and like short-dated bonds. We had a huge push on like private credit tokenization. We're all seeing all sorts of other type of debt and money market funds. It does make sense to, when you depart from that, like the next step is to go into stuff which is a bit trickier, maybe from a regulatory perspective, maybe from other consideration. Yeah, I think equities make sense, but in the form that they are done right now, I think that's not the long-term steady state we're going to end up. I do think like on a very long-term timeline, what we're going to see is like native issuance of blockchain-based equities. So, but for that, we need to have the buy-in from the regulator. You need to have like, imagine go to Apple and say, hey, can you issue part of your share capital in actual like native tokens? Sounds like a really cool idea, and it actually helps upgrade the entire financial infrastructure if everyone starts doing that, rather than taking the stocks, wrapping them in some form of a like token, and then creating a secondary market for those. I think that's just an intermediary step. On a longer term timeline, we'll probably see a lot of native tokenization. And then moving on from there, I think, yeah, you'll have other, you know, private equity, pre-IPO stocks, all the way down to, you know, tokenizing really illiquid stuff. But I don't see that happening anytime soon. We've seen a lot of attempts at tokenizing carbon credits, you know, real estate. Those are, I think, a very long way to have a meaningful impact.
The problem with these like longer tail, well, not longer tail, but like less liquid assets, it's a diligence question. This is something that like...
Yeah, I think this gets missed, actually.
Yeah, it gets missed like big time. I remember like in 2018, I was doing like the security token work, and it was like all about tokenizing real estate, and like the Aspen Resort was tokenized. And one of the things I was sitting there thinking, I'm like, okay, so let's just assume that it's true that these assets become like, can become more liquid, become easier to trade. Now the question is, do you actually buy it? And if you're an investor who's sitting there deciding to buy it, what you're trying to ask yourself is, has it burned down? You know, is there a huge flood that has like ruined half of it? Like, do they have insurance? this diligence question is one that, like, I actually think it's an insanely big market opportunity in terms of somebody who can solve this well enough, because you don't have to solve it perfectly. You just need to give like good enough confidence. Now, a lot of that comes with, again, bringing things on chain. Like, let's just assume that you start actually saying, hey, everyone's going to pay their rent on chain. I'm going to pay my expenses on chain. Now you need to fast forward quite a bit for that. Now suddenly, like, the room for like error in terms of your diligence starts getting smaller because you can actually see this. But regardless, long way of saying diligence is a huge problem on those assets.
It's I mean, just to summarize another way, some people will say, okay, well, we're going to get more liquidity on our like long tail assets, but liquidity isn't a problem of the blockchain or else. It's an information problem, right? Fundamentally, it's allowing buyers to have the ability to access the information they need to underwrite and price opportunities. I'll do one kind of quick pass through everybody. What's the sort of one hidden gem opportunity that you see in the market, either from a business development perspective and bets you're taking that you think are unique, or from an investment perspective? Paul, I'll probably start with you. What's the one sort of hidden idea that you're most interested in and you think will play out really well in the next 5 to 10 years?
So I'm now a little bit biased because I see colored gems as a new investment class in comparison to gold as one of the big opportunities now.
So I think I've seen a lot of crypto cards taking off these days. Definitely a hidden gem.
Cards.
Crypto cards, yes.
Do you want to do a little bit of an explainer for the audience, kind of what you're seeing there? Actually, it's really interesting. Yeah.
Yeah, I think that goes back to my initial point, as in like market segmentation. If you issue cards for crypto native users, they might be really picky. But if you issue cards to the people that don't have bank access and they will have to use your card for daily life, then you can easily make economy of scale and start to profit. I see at least 3 companies that's launching like 1 million cards and reaching like a high revenue at around 50 million to like 100 million. So it's happening right now.
Quick follow-up to this. Do you think anybody can displace Visa? So they're all the cards companies you're mentioning, like they're using Visa and MasterCard under the hood. Can anybody actually displace Visa and MasterCard and recreate that merchant network, or no?
I think there's a chance, but right now we're still at a very early stage. So Visa and MasterCard are trying to offer the best deals to these card issuers. So Visa and MasterCard could directly receive USDT, USDC, right, as Rain does with Visa. So I think in the future they will try to cut that part of the card issuing or any transaction fees from Visa and MasterCard. I know that you guys invested in one of the payment networks like that, so we're very bullish and very excited to see how it plays out.
Juan?
Yeah, we're biased because we're investors, but I'm fascinated by the idea behind inversion, where you could invent this kind of private equity playbook where, if adoption is not coming organically, we can force it to happen by acquiring businesses that may already have distribution, may already have some type of business model that benefits from crypto. And there's a huge capital base that we have already with tokens. Why don't we just acquire these businesses and roll them up?
I think novel kind of yield-bearing stablecoins is very interesting. We're seeing a lot of structured products that are inherently more complex, but also provide more returns. And this is going to be quite an interesting development now that we're going back into kind of downwards trending interest rate environment. We're going to start for yield again, and this is an opportunity that I see coming up.
Yeah, I totally agree. Actually, like the Athenas of the world and the kind of the broad complex of products in that category. Yeah. Marc, okay, this will be a good one. You heard it here first. What's Polygon's big hidden market that you're gonna invest into and sort of get behind?
Yeah, I mean, it's not really a secret if you actually follow Polygon closely. Is for the last 12 months, we've been super focused on payments before, frankly, stablecoins got as popular as they are now. I think the opportunity that people really miss is actually understanding Visa and MasterCard well. It's actually super simple. Like 25% of Visa's revenue is based off of border payments. And there's not a single person in the world who doesn't think that stablecoin rails, not stablecoins, stablecoin rails will replace that and that's $250 billion of value right there. Then you go a step further than that and you look at where's Visa's revenue coming from beyond that, and the answer is it's not from volume-based transactions the way people think. It's actually transaction-based volumes. A lot of people say blockchains aren't going to make money if they focus on payments because there's no margin. Visa literally charges like 5 to 10 cents flat on transactions today and makes $17 billion a year off of it. That's very easy to capture that volume. So you go cross-border, merchants start adopting stablecoins across the board, PSPs support stablecoins across the board, many frankly already do, and now suddenly it starts being really easy to say, hey, Venmo just replaced those rails underneath with stablecoins. Yes, it's not a better user experience the way the cross-border ones is, but using just one network is a lot easier. And so for me, it's this low-hanging fruit that's going to take many, many years of probably $1 trillion of value that's going to go from existing networks to crypto networks.
Awesome. That's it. Thanks so much, everybody, for the time, and thanks to the panelists. Yep.